Hello, everyone, and good afternoon. This is Jason Ulrich with Top Shelf Traders. I hope everyone's having a great day so far. This is another free education live training event that we do here at Top Shelf, and it's great to have everyone here with us. Before I get started or too far ahead of myself, we've got folks filtering into the room. We're doing the end of the day today, right after market close. And by all means, as folks are filtering in, just give me a quick yes and yes that you can hear me okay and that you can see Jason Love's screen okay. I was going to use my name, but just a quick yes and yes in the questions box. That's what we'll be using as we go through today's session. All right, perfect. Thank you. Thank you. All right. Well, we are thrilled to have Jason Love with us here today. For those of you that might not be familiar with him, he is the founder of the Oil Trading Group. And he is a great partner of Top Shelf Traders and one of our educational partners as well. And one of the things that we constantly look at and talk about, both with our traders that are part of our universe here, as well as people that put in requests for different types of content or training, we constantly are hearing about the different offers that are flooding the marketplace right now. So you don't have to open your inbox and hang out for too long to see hundreds of offers every day. I'm sure if you've entered your email in anywhere, you'll get someone promising something. And there's all sorts of day trading educators that want you to buy their stuff or somehow otherwise get involved with their program. And there's a lot of things that get said. And one of the things that Jason is going to talk about is pulling the cover off of what they say, but also giving you a glimpse into what you should be looking at as far as your success blueprint and what the holy grail of trading actually looks like and what you should be looking for. So as always, this is going to be an interactive, informal session. Please don't hesitate to raise your hand if you've got a question. I will man the questions box for Jason. As always, this is going to be recorded, and we'll go ahead and post this and send those out. We had a bunch of people register for this, so I imagine we'll have people filtering into the room. But if for whatever reason you have to leave early or check out, no problem. We'll make sure that you get a recording of this event. By way of a little bit of background, Jason has been around for quite some time, but one of the things that I love about him, and I mentioned this on the last webinar that we did, he's a veteran of the United States Navy. He served in Desert Storm. So this guy, in addition to knowing a lot about trading, has extensive experience both in the corporate world as well as serving our country, and that means a lot to us here. So Jason, I'm a big fan. You know, our team here is big fans of yours. Welcome. Thank you for joining us, and I'll turn it over to you.
Awesome. Thanks. Thanks very much. Hopefully I can live up to that really cool introduction. Thanks again, Jason. It's good to be here today. Hopefully everyone can hear me okay. And we'll get started. I'll try not to take up too much of your time. I know the markets have been extremely aggressive over the course of the last really 3 days, going back into Friday of last week. Yesterday, of course, was a big sell-off, and then we had a little bit of a rally in the markets today. And so during times like this, the topic of what I'm going to talk to you about today is even more germane to what we are doing. So let's get started here. Like I said, I don't want to take up a ton of your time here today, so we'll try to get through this as quickly as possible, get you some information, and let you get about your day. So one of the things that we're going to talk about here today, I know the title is you probably looked at this title and went, the day trading holy grail really does exist. And so you're probably saying to yourself, well, is that really the case? And there is no such thing as a holy grail. And you know what, when it comes to trading setups, there really is no such thing as a holy grail. But what I think I'll show you today, or what I will show you today, I think you'll believe me when I tell you that it really is kind of the backbone of most successful trading programs. All right, so let me get clicking here. All right, so my goal here today is to show you how to become a consistently successful trader without using complex trading tools or having a high win percentage. High winning percentages are nice, but I'm going to show you how you can do that without having to necessarily have that high winning percentage or using those complex trading tools. And if you stay till the end, we're going to have a drawing at the end of the session today for an extended trial package into our day trading chat room. Included in that's going to be the OTG Risk Analyzer spreadsheet and training video. I'm going to show you that trading spreadsheet here in just a little while. I'm also going to introduce you to one of my favorite trading setups and most used trading setups that we do in the room, in our day trading chat room. I'm going to give you 5 days in the live trading room, and we're also going to give you 5 days of trade plans for the CL and ES. And included in that is our ebook, How to Select the Best Day Trading Vendor. And this is a really cool ebook, and I think I was just talking to Jason before we got started. I'm going to, inside of this book, I'm going to tell you why I consider the question, can I see your results, to be the worst question you can ask when evaluating a trading system. So if we don't end up drawing your name today, make sure you go to the website and download this ebook. It is free. The ebook is free. I'm going to include it in the extended trial package here today. But make sure you go and look at that because I think you'll find some interesting information. So as Jason so eloquently introduced me, my name again is Jason Love. I'm the founder of the Oil Trading Group. And if you look over there to the far left and kind of go from left to right, you can see that Father Time catches up with us all, right? So that's me on the left as a bright-eyed, bushy-tailed 18-year-old kid, fresh out of boot camp and in my new government-issued Navy blues. Right there to the left, that was back in 1988. There in the middle, that picture was taken of me last week. So again, you can see age catches up with us all, right? I am a veteran of the U.S. Navy, as Jason pointed out, and I was a vice president of an inbound call center. Kind of the way that things worked for me after I joined the Navy. I was in Operation Desert Storm. I was on a ship that was in the Persian Gulf during 1991. During that Operation Desert Storm, came home, got started at a local college, and took a entry-level job in the call center. 15 years later, I was the vice president of that inbound call center. And along the way, and the reason I use these or tell you these two things is because they have really shaped my way that I look at the world in trading. As a veteran of the Navy, obviously, being disciplined and organized is a very key component to being successful. That, in fact, it's demanded of you in the military that you be organized and disciplined. And as I was working my way up through the corporate world, organization and discipline also became very important as I became a leader of an organization that had directly or indirectly, 300 people that were working underneath my organizational chart. We founded the Oil Trading Group back in 2010. I'm going to tell you a couple stories about why we ended up founding the Oil Trading Group back then. I have been an oil educator for a well-known prop firm. I've been featured on Squawk Radio. In fact, I had a weekly, actually it was a daily radio show for about 15, 20 minutes talking about the oil markets and the ES. And I have also been a funded trader with the prop firm. One of the things that I'm most proud of is that over the course of our time, and this is more recent history, our training program has helped over 24. Now it's getting closer to 36 people earn more than $2 million in fully funded trading accounts. So basically what happens is that our people use our training program and our information and our methodology to go out and apply for basically job interviews, proving that they can trade with these prop firms. And again, it's not just a single prop firm. There are several different prop firms that are out there. And again, we've gotten people to achieve prop firms in excess of over $2 million. All right. So I have, of course, over the course of my career, I've done a lot of things right, but I've also done a lot of things wrong as well. And so after doing this for 10 plus years, I've seen all types of indicators in trading rooms. I told you I'd tell you a story. I've got really 2 stories about trading rooms that I want to share with you here today. When I first started trading, I was dabbling in the currency markets, and the currency markets were just a bit too aggressive for me, right? it's active in the Asian session, the London session, the New York session. And my particular personality, especially as a new trader back in, gosh, this was back in 2003. As a new trader, I was spending lots of time watching the markets and in the Asian session, and then I couldn't sleep, and I would be up trading the London session, and then I would be into the New York session. It just became this real circular, unhealthy thing for me, right? And so what I did is I decided to move over into the commodities, and I really took a liking to oil. And so the very first trading room that I got into in the oil markets, it was a guy had a little bit of a Texas twang, and I'm from Texas, so I recognized it right away. And as a guy who gets up early and likes to look at charts, I would do my caffeine of choice, if you will, is a Diet Dr. Pepper or Diet Pepsi or Diet Soda. And we all know how that familiar sound when you open up that can, right? It goes, right? And so as I got into this person's trading room, I would hear that familiar sound of that carbonated beverage going off every 15 or so minutes. So 4 times an hour, 4 hours a day, that's 16 of these carbonated beverages over the course of time. And so after a couple of days, and we didn't have very much success, and I thought, man, this guy must be wired with all of this carbonation and all of this caffeine. So I tried to call him one afternoon, and I reached the voicemail and tried again the next afternoon. So eventually I'd caught up with him early one morning, and I said, to break the ice, I said, you know, I noticed that you have the that familiar can of that carbonated beverage and that caffeinated beverage every morning. I'm a Diet Dr. Pepper guy. What are you? And he said, well, and he kind of laughed at me. And he said, it is Coors Light. I said, what? So from 7:30 in the morning until about 11:30 in the morning, it was every 15 minutes, it was a Coors Light. So I guess that's the way that was the way that he survived a particular trading session. So I moved on from there, and I got into a trading room where the guy was a little bit better. But what he would do is, if he did not have a winning day, if he did not have a winning day, he would send out an email with a market replay showing that he did have a winning day. And so, again, coming from the military background, coming from the corporate world, I knew these things weren't right, obviously. And so I thought that there was definitely a need for a trading room or a location where we could all get together and have some good, honest trading evaluation and discussion. And that was the original impetus for me getting started back in 2010, starting the trading room back in 2010. What I've also learned after doing this for 10 years is that complex tools and indicators are not necessarily better. But what I also know, and every trading vendor like me knows, is that complexity sells. The more complex, the more colorful, the cooler the indicator looks on your chart, the more likely it is to sell to you, right? And so after talking to traders for hundreds and hundreds of traders over the course of the last 8 years, what I have learned is that complexity sells, and the charts that I see are so complex and so involved sometimes that it is very difficult to even understand what someone is looking at, or in most cases, to even make a valid trading decision. So again, after doing this for 10 plus years, we understand that complexity sells and that complex tools and indicators are not necessarily better. A high winning percentage isn't the same as being profitable, right? So one of the things that we all look for as traders, and one of the things, and again, Jason and I were talking about this a few minutes ago, one of the things that we look for as traders, and one of the first questions we always ask is, how much does it win? How often does it win? And so again, we've all heard this simplistic comparison of which is better, a trading system that wins 90% of the time, or a trading system that wins 10% of the time. And from a knee-jerk reaction, we all want to say the 90% is better, but the real answer to that is incomplete, because a high win percentage isn't the same as being successful. You can have 9 winners in a row at one tick and take that 11 tick loser, and it's a not successful trading system. And conversely, you could take 9 one tick losers and take that 11 tick winner, and the 10% trading system is actually better. And so again, we understand as a trading vendor that high winning percentages sells to you, but it doesn't necessarily mean it is right for you. All right. I've also learned that losing is a part of trading, and you need to have a strategy for the losses. Intellectually, we can all sit down and understand that losing is a part of trading. But once you've been popped in the nose a few times, it doesn't necessarily mean that you don't react, right? And so, as a Texan by nature and by birth, one of my favorite football teams is the Dallas Cowboys. And one of the books that I read was Jimmy Johnson's book about his Super Bowl years with the Dallas Cowboys. And one of the stories that he shares in there, that is shared in the book, is they were on the year that they went 12-4 and ended up winning a Super Bowl. Their last game of the season was against the Washington Redskins, and they played like crud, right? They fumbled and turned the ball over, looked uninspired, and they ended up getting beat at the last game of the season. And when they got on the plane, they were kind of, 12-4, successful season. We're headed to the playoffs. And as he walks on the plane and people are listening to their headphones and playing cards and kind of goofing around, he immediately just goes ballistic on the team. And by all accounts, it was a very tense plane ride home. He ended up cutting one of the running backs. And so they went into the playoffs with only one running back. And it was just, he just made a really big deal about it. But the moral of this story is this: Jimmy Johnson would not make a very good trader. Jimmy Johnson hated losing more than he liked winning. And if you don't get your head wrapped around the fact that losing is part of the trading and to have a strategy for managing the losses, then it's going to be a tough ride for you as a trader. And so to that end, the number one job of a professional trader is not winning, but rather preserving capital. So one of the things that I ask new traders that I run into is, what is the number one job of a trader? And they always say to me, it's to make money. And my answer always to them is no. Your number one job as a trader is not about winning, but rather preserving capital. And it's one of the reasons why we've been so successful putting people through prop firms and using other people's money like these prop firms to trade with, because their number one objective is risk management. Their number two objective is capital growth, right? So these are some of the things that I've learned after 10 years of doing this. And I've discovered these things the hard way. And what I'm going to do today is I'm going to provide you with the blueprint so that you can get it in an easier way. What is the hard way? Spending thousands of dollars on indicators and complex trading information. We've all done it, right? I've done the same thing. I've bought tools and indicators and programs and packages and all of that stuff over the course of time. But what I have learned is that every single one of those things that I've purchased had its fallacies in one way or another, i.e., it had losing cycles in it. Also, countless hours and resources on looking for high win percentage setups, tweaking, modifying, manipulating a trading system after a few losing trades or losing days. And so what I always ask, and I can't see the people in here today, but show of hands, and you can kind of do this at your desk. How many people have actually purchased the trading system? They studied it, they reviewed it, they watched videos, they read books, they talked to people, they read reviews online, and they decided to finally buy the trading system. They were not going to be fooled again. This time I'm going to do my homework and I'm going to buy that trading system and I'm going to get involved with it. And then after you purchase it, it immediately goes into the inevitable cycle of drawdown. And so if you don't immediately kick that thing to the curb and move on to the next thing, then what you start doing as traders is what we all start doing as traders is we begin to tweak it, modify it. Let me add this moving average. Let me add this Ichimoku cloud. Let me add this divergence indicator to it. Let me see if I can get the RSI or the CCI or the directional movement indicator. See if I can add something to this so that I can minimize the amount of losing that's going on now all of a sudden in this trading system. I'm going to show you a tool here in just a minute that is going to help you avoid some of these pitfalls. Also, moving from trading system to trading system during the inevitable drawdown cycle, right? Again, that's all of these are kind of part of the same process. If your trading system loses, you go, okay, that's a loss. If it loses again, okay, that's a loss. If you get to a situation where you were losing 4 or 5 times, that's usually the place where people eventually start to tweak, manage, manipulate, or they just move on because this system is broken and I got stuck again. All right, so I'm going to go through a few numbers here with you in just a moment. So what we always like to do is to make sure that you're familiar with the disclaimer. The Oil Trading Group does not hold itself out as commodity trading advisors. Given this representation, all information and material provided by us here today is for educational purposes. It should not be relied upon or considered to be specific investment advice. The CFTC rule on hypothetical or simulated performance results have certain limitations. Also, trading performance displayed herein is hypothetical performance results and may have inherent limitations. And finally, the risk disclosure. Futures and Forex trading contains substantial risk. It is not for every investor. Please make sure you read and look at these entire disclaimers as you move on in your leisure here. You can do that on our website at www.oiltradinggroup.com. All right, so the Oil Trading Group success formula. All right, so this is a very simple formula, and it really is simple to implement if you have the right tools. So as I look at this, and the way that we talk about this in our day trading chat room and on our website and places like that, in environments like this, every single one of us will agree on one thing. We all want to be successful traders. Okay, I don't think anybody sits down and says, yeah, you know what, Jason, I'm not that interested in being successful. Every single one of us wants to be a successful trader. So we all have that in common. Now, success is defined on an individual level, okay? And in order to have a proper objective or proper goal, it needs to be quantifiable. So a successful trader for one person might be simply, I want to be profitable this week, this month, this year. Another trader may say, I want equity growth, 1, 2, 3% a month, a week, a year. The definition, how you are defining your measurable, the metrics that you're going to use in order to determine whether or not you've been successful is going to be up to the individual, but each person wants to be successful. That's why we all sit down and do this. For us, our steps to becoming successful traders is step number one is to define our trading edge. We need to identify our statistical advantage over the market. I'm going to show you that here in just a couple of minutes. Step number two, trading strategy. Our trading strategy to get to the objective, right? To get to our edge, which gets us to be successful traders, is to cut the losing trades short and to let the winning trades run. So again, that's cut the losers short and let the winners run. Our third step here is trading tactics, aka setups. We use three basic types of trading setups: price action, decision points, and volume. And we're going to talk about those here in just a moment. All right, so our statistical edge. This is a snapshot of what we did in our live trading room. Now this is a little bit older. It's a couple of months old. We did this presentation we do this presentation quite a bit, so I can go back and update this. But at this point here, I just want to show you a few things. We're always trading two lots. Now, I get asked a question about why two lots, why not four lots or one lot or six lots or whatever. What we ended up doing is I've run this room long enough. I've run the trading room and I've been a trading educator long enough to know that what happens is that people come into a room like mine, and despite all of the warnings and implications about trading live in a place that you've never been, people will, let me say it like this. There's a reason why they put on the plastic bags that you get from the dry cleaner. Don't put this on your head because somebody has done it. So what we do is we trade two lots. That's nice and safe. We talk about risk management and risk control. What this is based on, these results here are based on trading two lots. The average winning trade here is 2.2 times greater than the average losing trade. So if you look here, average winning trade is 432. The average losing trade is 195. The hold time on the winning trades is 4.5 times longer than the losing trades. So again, if you think about our philosophy here is cut the losers short, let the winners run. We're holding on to our winning trades for 1 hour. We're holding on to our losing trades for 13 minutes, right? So that's 4.5 to 1, 4.5 times longer than the losing trades. Our largest winning trade was 5 times larger than the largest losing trade. So if you look here, our largest gain was 1,700, 170 ticks. Our largest loss was 34 ticks. Also, despite losing or breaking even on 66% of my trades, I averaged a net positive gain of 24.5 ticks per day on 2 lots of risk. So if you look here, number of winning trades, 35.2, number of losing trades, 49%, and number of scratch trades at 16%. That happens to you, by the way, when you are holding on for bigger targets. It's going to come back and get you at break even sometimes. That's why your break even percentage is so high there. So again, cut the losers short, let the winners run is our statistical advantage. I'm going to show you something here in just a few minutes. Let me finish with one more slide here. So despite a win rate of 34%, we had 62% of the days were winning days, right? So if you look here, whoops, come back. Give me 1 second here, guys. All right, so now we are locking up here. Hang on a second. See if we could get this back in rhythm. Give me 1 second here, guys. My apologies.
Let me know if you need a quick commercial break here, Jason. Happy to do it.
Yeah, I think we'll be okay. It just all of a sudden, it didn't like me zooming in, I don't think. Yeah, let me shut this down. I'll be right. Let me just we'll save
No worries.
That. Yeah.
While
So
we've got
anyway,
go ahead, Jason. Whatever you got to
go ahead.
do.
No,
Okay.
go ahead.
While we've got the group here today, one of the things that we'd love to do is just get an understanding of your experience. How many of you have been trading for quite some time? How many of you are just beginning? If you wouldn't mind throwing that in the questions box, we would love to understand that. That always helps us tailor these events a little bit more.
Okay, so we're back on here, and my apologies for that, guys. While you're answering that, I'll continue to push forward. Despite a win rate of 34%, we had 62% of our days were winning days. Our average daily gain is bigger than our average daily loss. So our average daily gain during this time frame was 77 ticks. Our average daily loss was 62 ticks. Even on the losing days, the winning trades were being held 3 times longer than the losers. Again, cut the losers short, let the winners run. And what I want you to do is to look at the difference between winning days versus winners versus losers, right? So on winning days, right? On winning days, the average winning trade was 577 versus 181, right? So 577 divided by 181, that is a 3.2 times greater on your winning days. And so that really is what makes up the difference. So when you start talking about statistical edge, that is our statistical edge. It is to cut the losers short and let the winners run, right? And so one of the things that I get asked quite a bit is, are you a all-in, scale out trader? How do you manage your positions, right? That is one of the things that I get asked quite frequently. And so I am an all-in and all-out trader. And so I talk to a lot of traders, and here's kind of what happens. So I get there's a pretty prevalent theme in the day trader vendor space, educator space, like we're in here, I'm talking about here. And that thing goes like this. When I get to 10 ticks positive, Jason, I like to take one of my contracts off and I let the other one run. Cool. So let me ask you this. I always say, do you know where the second trade, where that second lot goes off at on average? Do you know where it goes off on average? And typically speaking, most people tell me they don't know. So we spend a few minutes going through trades, and looking at their stuff. And what invariably happens is that second lot goes off somewhere between 5 to 7 ticks. So for the sake of this discussion, we're going to say it's 6 ticks, right? So you take one off at 10 ticks, and then sometimes the other one goes 30 ticks, and sometimes it comes back and takes you out at break even. Some traders have a 10-tick stop and they have a 10-tick target on the first one, then they take a 10-tick stop so that they could go to break even. And when you mash all of that together statistically, all of those different ideas, you come up with about 6 ticks on the second lot. So the next question is, what's your risk? Well, my risk is 11 ticks. So we're going to talk about the CL for just a minute. And so you've got a $220 risk and a $160 reward. So essentially, when the trade is going in your favor, okay, I always ask this question too. When you take your stops, do you take one off at 10 ticks and the other one off at break even plus one? Or do you take one off at 6 and one off at 11? And the answer is no. Invariably, they always tell me they take the full stop. So here's what happens. When you end up doing it that way, sorry about that. So when you end up taking one off and letting that, when you take one off and you let the rest of that run all the way to the stop, essentially what you're doing is you're maximizing your loss and minimizing your reward. So when the trade is going in your favor, you're getting out. You're saying, oh my gosh, I got to get out when the trade's going in your favor because it's positive and I like to be positive and I want to feel safe and I want to feel good about it and all of those kinds of things. But essentially what you're doing is you're limiting your ability to be profitable or successful because you are cutting the winner short and letting the loser run. So I'm going to show you exactly how that works on this particular spreadsheet. Now, this spreadsheet is what we're going to be giving away one of these spreadsheets at the end of the session here today. And we call this the OTG Risk Analyzer. Also, it's affectionately known as the desktop psychologist. So if your initial equity is $50,000, okay, let me take a step back. What this spreadsheet is designed to do is to run a couple of what if scenarios, and then I'm going to plug in those actual numbers that you saw earlier, right? So I'm going to plug in the actual numbers you saw earlier, but first we're going to run that what if scenario of what happens when you take one off at 10 ticks and then the other one goes off at 6 ticks, okay? And so your win percentage is going to be a little bit higher when you do something like that because you're going to have one go off on average at 10 ticks. And so we're going to run that scenario. But first things first, let's set this up. Let's assume you have initial equity balance of $50,000 in your account. Now, if you don't, this is where those prop firms come in and they provide you with trading capital that allow you to be able to get to these points, okay? Where you can have this kind of trading capital from which to work. Again, we just talked a few minutes ago about our program putting in almost 3 dozen traders through the prop firm trading programs. And so again, being properly capitalized, which is a completely different discussion, is one of the objectives that we have here as well. So if your risk per trade is, we'll say it's 11 ticks times 2 lots, which is $220. If you take $220 and you divide it by your initial equity of $50,000, that gives you a 0.44% risk per trade. Now, what we're also going to do is we're going to say that every lot that gets traded or every trade that goes on is going to cost you $10 in either A, commission, or B, slippage. Okay, so this is kind of a what if scenario that we're doing here. So I've already filled in some of the information here. Let's say that you do run the 160 on the wins on average and your losses are 220. So that means that you're going to be right 0.73 is your risk to reward. Your risk to reward is 0.73 to 1. Okay, so if you're risking 220 to make 160, that reward is 73% of your risk. Okay, now let's assume for a minute that you're winning 55% of your trades and you're losing 45%. All right, so what this is going to do is it's going to statistically and randomly distribute trades, 100 trades, through this spreadsheet to show you what a one off at 10 ticks and the average at 6 ticks is going to do for you if you win 55% of the time. So we're going to run all trials. And this says that you would have lost almost $4,300 despite the fact that you won 55% of the time because your risk reward is a bit out of whack. Now, this is actually giving you a winning percentage, if you could see here, at 55%. This is giving you a 55% winning percentage. But that's okay. Let's run it again. This time we're going to ramp up the number of wins. We're going to give it 62%. Whoops, let me reset this. We're going to give this 62% wins. And we're going to go back here and we're going to go 38% losing trades. We're going to hit start and we're going to run all trials. And this time with a win rate of 62%, you made $464. I don't know about you, but I don't know how many people sit down and say, hey, I want to do this for 100 trades over the course of a month, and I want to make $464. So not many, right? And so let's take a look here. So that's a lot of winning. Every number, every one of these numbers. So what this is basically doing is it's breaking it down for you on a trade by trade basis, and it's randomly distributing these trades out over the course of what it would take to get to a 62% win rate and a 38% losing rate. So we're going to reset it. We're going to start it one more time, and we're going to run it again. Then we're going to put some real numbers into it. All right, this time you lost $676 because of the way that it was distributed, and that was a 62% win rate. So winning 62% of the time, you're somewhere hovering around break even on a month-to-month basis, simply because you take one off at 10 and that other one goes off at 6 ticks with an 11 tick stop. All right, so now let's come back over here and let's go back and take a look at these numbers here. All right, so we said our risk reward was 2.2 to 1. Our winning number and winning percent of trades was 35%. And we had a losing trades of 49% and break even at 16%. Okay, and I know this is a lot of numbers. I'll get to the point here. I just want you to see something here. One of the things that we talked about. So we are at, right now, we are at a 2.2 to 1 risk reward. So you plug that in right there. You come over here and you say that our win percentage was 35%. We were losing 49% of the time and break even at 16% of the time. So if you look down here where it says total trades, that's 100 total trades. We're going to hit start and we're going to run all trials. And these are actual statistical numbers. And so with a win rate of 35%, in the course of 100 trades, that was a profit of $3,800. Okay, $3,822 based on the way that those were distributed around the. That was based on the way that those were distributed. Let's reset it one more time. We'll run it again, so they'll randomly distribute it, and we'll see what the number shakes out to be this time. This time at 35% win rate because of the way that they were stacked. In the win-loss area, that was a profit of $4,300, okay? So now, here's what I want to show you. Remember back in earlier in the slides that I told you that one of the things that traders do very quickly is if this new system that you purchased goes through some drawdown or that inevitable period of drawdown, you start to tweak it, you start to manipulate it, you start to add indicators to it, or you just give it up altogether. You just say, you know what, this thing's broken. I got stuck again, and I am going to get out of this thing, and I'm going to move on to the next trading system. I want to show you this. If you walked into my trading room, okay, you come into my trading room, and you see me do this right here, okay? You come see me. I take about 4 trades a day. You see me on trade 34 to 53. That is 20 trades. And you see me win 4 of the 20 trades. 4 divided by 20 is 20%. You see me lose 80% of the time. What you're going to say is you're going to say, this guy is terrible, right? But I just showed you that this exact model right here, at the end of a month of 100 trades, was worth $4,300 trading 2 lots. But if you see this run right here, you're going to say, this guy can't trade. He can't find his ace with both hands, right? And so that's an 80% lose rate right there, okay? And so you're going to say, I can't do this. This is just not worth it. Let's say that you got into you watched a trading system go right here in this little run for 4 trades from 60 to 64. And over the course of that, you said, man, that's $1,000 winner in 4 trades. Sign me up. I'm going to buy that thing. I'm going to buy it because that's $1,000. This thing only costs $2,000. I just made $1,000 in 4 trades. I'm going to be super rich. And then what happens? You get here, right? You start to go through this little run right here where you had 64 to 80 is 17 trades, but you only won 4 of those trades. And now all of a sudden you're saying, well, I need to add this moving average. I need to tweak this. I need to manage it. Or I wasted $2,000 and I'm going to move on to the next system, right? So what this spreadsheet is designed to do, and remember, with this win rate and this whole particular idea, your projected forecasted for profit was $4,400, but it's going to, every system is going to go through the inevitable drawdown period, right? So your first 25 trades here, you only win 1, 2, 3, 4, 5, 6, 7 of them. You lost 18. It is a hard thing to stick to it, but it is the statistical edge that will keep you going in the long run. It's your statistical edge. It's our statistical edge. We know that if we cut the losers short and let the winners run, and I showed you on this page here out of my trader view reports that I only won 35% of the trades over that window of time, but yet we still had the opportunity to be successful because the risk reward is in line. Cut your losers short, let your winners run. That is our quantifiable, definable statistical edge in the market. Now, how do you get there? That sounds great, Jason. How do we get there? The way that you get there is our trading strategy. Our strategy to achieve that is to cut their losers short and let the winners run. If our number one job as a trader is to preserve capital, then the number one job of a setup, okay, we'll talk about that in a second. Let's stay on the topic here for a second. The number one job of a professional trader is not about winning, but rather about preserving capital. George Soros said it the best. It's not whether you're right or wrong, okay? That's important, but how much money you make when you're right and how much money you lose when you're wrong, right? That is the key. That is the name of the game. That is how you are going to be successful. Cut those losers short, let those winners run. Here's a quick test for you. This big blue dot or purple dot on the left and this big purple dot on the right. Which one is the losing trade and which one of these is the winning trade? Now, I can't see what you're saying, but I can imagine that most of you are saying there's no difference, right? So as you enter into a trade every day, this is what the trade looks like. You don't know if the big purple dot is going to be the winning trade or if the big purple dot on the right is going to be the losing trade. You have no idea. Regardless of the amount of back testing, forward testing, statistical stuff that you've done, right? Regardless of that, you don't know if that trade is going to win or lose. It's a 50-50 shot the minute you enter into that trade. So as day traders, we don't know the difference between a winning and losing trade before price hits our target or it hits our stop loss. So understanding risk is important because you can control it. So if you're risking 1% of your account, then you can lose 100 trades in a row before you blow out your account, minus commissions, of course. Or if you are risking 10% of your trades that are 10% on each trade, then you write down here, it is a whole lot less number of trades that you can lose in a row before you blow out your account. Understanding your risk is important because you can control it. And what is the importance of a good rate of return? You can, with a 2.5 to 1 ratio risk versus reward, then you can win 28% of the time and still be safe. Think about that for a second. Wouldn't it be awesome if you could sit down at your desk, and doesn't it relieve a lot of pressure? And again, we talked about having a loss strategy in your mind. Doesn't it relieve a lot of pressure to say, I can lose 72% of the time and I could still be okay because my risk reward is in line? So when I win, I'm winning big, and when I lose, I'm losing small, right? That is the importance of a good rate of return. 2.5 to 1 risk reward. You can be wrong 72% of the time and still be okay. That is powerful. That is how you manage your loss strategy, right? That's your loss strategy. Understanding risk reward. We talked about Holy Grail here at the beginning of the session. This is the Holy Grail of trading. Equity growth is around win rate, position sizing, and risk reward. That's how you get account growth. Managing your risk, maximizing your reward, adding to positions, you're having a win rate. If you can increase your win rate and still have those high rates of return, it is going to, all of these things are going to positively impact your rate of return or your equity growth. Now, we've talked about two things that I think are very objective. We all want to be successful traders. I don't think anybody sits down and says, gee, Jason, no, I don't want to be a successful trader. I think everybody agrees with that. That's real objective. The other objective piece to this is that it makes a lot of sense to us intellectually to say, hey, when I'm winning, I want to win more than it is when I'm losing. So when I'm winning trades, I want to win more than when I'm losing, right? We'll all agree on that. I don't think there's anybody that would disagree that I want to win more when I win than when I lose, right? Where it becomes subjective is in your tactics, AKA your setups, okay? There are as many trade setups as there are people trading them. We all come to this thing from a bunch of different perspectives, and there are as many trade setups as there are people actually trading them. And that's an important thing to remember. If the number one job of a professional trader is to preserve capital, which we've talked about, then the number one purpose of your trade setup is to offer a stop loss location that limits trading risk. Think about that for a second. The number one job of a setup is not to make you money. Okay. The number one job of your trading setup is to give you a spot on the chart that you can provide you with as little risk as possible that will offer you a chance to be successful. Okay. There are basically three entry techniques. There's the fade trade, a breakout trade, or a reversal trade, right? There are three different types of setups that you can use when you're trading. The reason I give you these three separate kind of ideas is really simple. As traders, we all are going to have setups that make sense to us based on our particular likes and desires and history and things that make up our personality and all of those kinds of things. Once we are all in the trade together, the Holy Grail is risk reward. I'm going to talk to you about our trading tactics and setups here. We have basically three separate categories of setups. And I think these are out of order here. All right. So the first type of trading setup that we use are support resistance areas. And so we have had the good fortune, I specifically have had the good fortune of having a relationship with a floor trader who traded on the floor of the S&P 500 for 30 years. He gave me and taught me how to trade his levels that he used every single day. We call these market maker levels, and they provide us with excellent targets and opportunities. This is a trade here from October 16th that was worth 96 ticks. You can see the entry location here at the top, what we call our daily structure signal, and it gave us an opportunity to write it down to this target down here. This screenshot here, and I can't zoom in, hopefully you can see this. This gives you our trader view, pulled the stats here from the trader view. They gave us that gain on that particular trade. Now, these slides are a little bit out of order, but what I want you to do here is take a look. This was September 5th. This was a 132 tick trade. Here's what I do here, and this is why this is important. When you get a recording of this email, or when you get this email of this recording sent to you, we have a YouTube channel. Included in that YouTube channel, or included in that email, will be a link to our YouTube channel. You're going to be able to go back and look for these videos. You're going to actually see the videos that we took in the live day trading chat room in front of a live audience. You're going to be able to see these trades. So not just hand picking them, but you're actually going to see and hear the discussion about why we got into it and how we got into it. Just remember to go look for these dates on our YouTube channel. So again, one more here. This is a 170 tick trade that gave us into our favorite retracement setup. This line up here is also going to be included in that setup package that I'm going to be giving away here at the end of the session today. We're going to give you a copy of that Excel spreadsheet that I just showed you, the risk analyzer. This setup was worth 170 ticks on the CL on September 8th. There's a video that accompanies that on our YouTube channel. You'll be able to go back and watch that. So that's our first particular way that we look at the world, is decision points, support resistance. We use what we call market maker levels. And here's the coolest thing about these is we are dedicated to helping you become better traders. And so what we do is we don't just give you the Ninja Trader indicator, we actually teach you how to draw them. So if you use TradeStation or MT4 or whatever else that is out there from whatever other trading platform that you're using out there, we're going to teach you how to draw these particular levels so that you can put them on your charts yourself and you can understand the logic, and so that you're not necessarily reliant upon me to provide you an indicator every time one of the trading platforms provides an update. The second idea that we look at is volume/order flow. We have a unique tool that we call our volume bars. And so what I want you to see on these volume bars is that they provide you with really interesting areas on your chart. So basically what these bars are doing is as the volume begins to pump into these bars, they get bigger and fatter with the more volume that get pumped into them, right? And so as you are looking through that, and many of you, order flow is one of the fads that are out there right now, right? A lot of people want to do order flow and volume and all those kinds of things, but some people get really they don't like to look at all those numbers. Again, remember, complexity sells. And so what this is a very simple tool for you to be able to say, right here, these heavy sellers, these sellers were in control. Market dips down, begins to rally back up on weaker volume compared to this selling. And then as you got right up here to where the seller stepped in, they stepped in again, the bars get fatter and bigger. Market sells off, comes right back up into the same location, and it starts that sell process again to the downside. So that's another one of the tools that we look at. It's a very simple order flow tool. It's visually appealing because the bars get fatter and bigger as volume gets pumped into these bars, and it's a really cool tool to help you understand order flow and where the trades are actually happening. The third thing that we like to look at is very simple price action and price patterns. We have price action triggers like fib patterns, double tops and bottoms, head and shoulders, trend lines. I mean, we look at price patterns. So we take a very simplistic approach to our trading setups and our tactics. We look for what the market is telling us. We're not using any lagging indicators. We're using price in real time. We're using volume in real time. And we are using these decision points and price action as it relates to our places to look to get in. So again, just to take a step back, if you want to tie all this together, one of what we talked about to start this session today is that I wanted to show you a way that you could be consistently successful without complex indicators and having a high win percentage. I believe that I've shown you exactly that. Low win percentage can equal high reward if your risk reward is in line, and simple price patterns, price action, and simple zones on your chart where the market is expected to react is where you will find your most success. Think about it like this. There are as many ways to get into a trade as there are people out there selling them, right? And so you'll tweak them and you'll add to them and you'll find the one that speaks to you, right? But once you get into the trade, we all arrive at the same exact place. Once we get into a trade, we want to cut those losers short and let those winners run. And that's what our market maker levels allow you to do. They allow you to find places on the chart where you can get in, use your order flow volume tool, use your price pattern action, and put a small stop, and then expect, based on the way that information works, that you could hit those targets down below you. If you don't believe me that it can be done, we have a YouTube channel, and you're going to get a copy and link to this. This is our YouTube channel, right? And there are literally, these are just pages and pages and pages of trade of the day videos. And, we just did one. This is a trade of the day video that was from day before yesterday. It was 203 ticks, and I'll go through this trade and information here, right? And that is on our YouTube channel. It is literally pages and pages and pages of these kinds of videos showing you exactly what we've done in a real-time environment in front of a live audience every single day. All right, so let me wrap this up. I told you I wasn't going to take try not to take as much of your time. I've been talking about 50 minutes. Let me go ahead and put a bow on it here today. So we are going to give away one of these packages for free. For everyone else that doesn't win it today, it's $47. I'm going to give you 5 days in our day trading chat room. I'm going to give you that favorite retracement setup that was worth 170 ticks on the CL. There's a video on the YouTube channel. You can watch it. I'm going to give you a copy of that OTG Risk Analyzer. I'm going to give you 5 days of trade plans once you come into the trade room. If you're interested, it's oiltradinggroup.com/OTO3. $47 gets you all of that. Somebody here, Jason's going to pick a name, and we're going to give away one of those packages, and Jason's going to collect the email address, and I'm going to send you the link to be able to get that for free. So that's it for me today, guys. Jason, back over to you.
Thank you very much. That was awesome and high energy. Way to get things started up again on a Tuesday. It's not that anyone needed to get their blood pumping after the last couple of days in the market. James, I'm going to, we did a random selection here of our attendees, and I'm going to send you a quick note. Look for it from me. You are a lucky winner.
Sweet,
And
James.
yeah, so keep an eye out. James, just so you know, this is coming your way. I'm going to put a quick copy or comment in the questions box or a note to you so that you've got that. In any event, look for an email from me, and we look forward to getting this off to you. So, Jason, I will forward this on to you. James, we promise that we won't harass you or anything like that. We just want to make sure that you get this package that Jason is offering.
Yep. I'll get you. I want to get you a page that has all your content there. And again, you join us for 5 days in the day trading chat room as well.
Cool. Yeah, James, you're the one.
Also, for everyone else, visit the site. You can sign up for a free trial. We do offer a 2-day free trial, but I'm telling you, this $47 thing that we offer, if you did nothing else with that but bought that thing, again, I don't want to try to oversell you here. That's not really with the purpose today. But all of the tools that I just showed you are what we do every day in a live environment. And those that I tell you what, that risk analyzer spreadsheet it will save you, can literally save you thousands and thousands and thousands of dollars jumping from trading system to trading system, because you understand that the inevitable drawdown period that is occurring is just part of what is just part of the way that the system works. So anyway, hopefully that all makes sense.
Very cool. Very cool. Thank you, Jason. James' email is off on its way to you now. Jason, I'll pass along James' email so you can make sure he gets his stuff. And we'll make sure that there is a yes, Duncan, the link will be sent out to everyone, so no worries at all. We'll get links and then also a link to the recording out to everyone. And Michael, no, not 50K. So thank you for joining, everyone. We'll get a recording of this out, and we'll follow up with the offers. And if there's anything else, please don't hesitate to reach out. We'll have another event this coming week. Please keep an eye on your email for that. We don't send out a lot of emails promoting events. We try to be pretty sparing about them. So please keep an eye out for that as well. Thank you for joining. Jason, thank you again. And everyone have a great day.
Awesome. Thanks, Jason.
Thank you. Take care.
Bye. Yep. Bye.